quickly jump into the markets now. From what we saw from the Nigerian exchange last week, the NGX was down week on week by about 0.67%. And let's put in some more perspectives into the markets. Abdullateef Grillo, Senior Research Analyst at Meristem Securities, is joining me right now via Zoom. Hello, Abdullateef.
Hi, Nancy. Good morning.
Good morning. Now let's get started. The bearishness that we saw at the NGX last week, what were the bearish drivers really?
So, like you said, market closed down 0.7% last week, and that's similar to what we witnessed the week before when the market closed down 0.33%. So, really, the not so positive mood again in the market is coming on the back of a lot of buying interest you have seen in the market since the start of the year. And like we know, the market can always continue to be positive. So it just seems like there's starting to be that decrease in the level of positive sentiment being witnessed in the market, not as positive as the beginning of the year again, what we saw in January, February. It's starting to become a sort of reversal that we are seeing in the market. Now, if you look at the market rate, that also attests to the fact that it's not just sell-offs on a few counters that is causing a drag in the market, but the mood is quite bearish across board. Where the market rate last week was about 0.47 times, which means that a lot more ticker lost than what we saw again. And also looking across sectors, all the sectoral indices were in the negative last week. So it just means that we are possibly starting to see a reversal to the positive sentiment that has lingered in the market since the last quarter of 2021. So that I think that speaks to what was witnessed in the market last week. But the only irony to it basically is that when we are seeing this happen now is the earnings season where you would have expected that investors are possibly taking position based on corporate releases we are seeing and dividend declarations. That's when we are now seeing this reversal in the market.
Now, Abdullateef, if we take a look at last week, of course, we can't forget the fact that the MPC held its March monetary policy meeting and kept all rates unchanged. Did you see any impact at all in the marketplace? So the market is already used to these kind of decisions, yes, is it used to this kind of decisions? So perhaps it has already priced the anticipated decisions into the market, or the market expected that the Monetary Policy Committee would take those decisions and would not change any rates. I hope you understand my question.
Yeah, like you said, the MPC held the Monetary Policy Committee meeting Monday last week, and what the outcome of the meeting was really wasn't so, I won't describe it as surprising. It was highly anticipated. Everybody expected that the committee will hold rates since it has decided to favor holding rate for its growth stance for a while now. So there wasn't really any shock from that end really, and that was rather expected by investors. So I wouldn't really say that impacted on what we saw in the market last week. It was highly anticipated. Also, we'd like to note that some of these macro events really they are not so tied to what we see in the market as happens in like advanced economies where when you see statistics or meetings like that being held, investors are able to react to that. So it's not exactly the same for regions like Nigeria, and also the decision of the committee to hold rates was highly anticipated by investors. So I wouldn't really say that impacted on what we saw play out in the market last week.
Now, for some companies, they've been paying dividends. I think African Prudential, Presco PLC, and some other companies. How do you see that impacting the outlook of the market this week? That's one. The B part of the question is, it's the earnings season and companies are beginning to pay dividends. Is this a good time to enter the market because companies are paying dividends, or should investors anticipate the valuations perhaps when the market is a bit bearish and move into the marketplace?
So, like I said, it's quite ironical that we are seeing sort of reversal in the market at this point when it is any season, and you have expected that that a lot of investors are taking position ahead of dividend declaration. So what that means really, I feel like a lot of investors already priced this in and already done way before now. So what investors should do at this point really depends on the objective of each investor. So if the goal for the investor is to hunt for dividend, I won't say now is a bad time to enter into the market if what they want is the dividend. So they can take position ahead of them getting in order to get dividends for this company. And also, if you are looking at the PE of the market presently, the market is trading at a PE of about 10 times. So I won't really say the market is cheap at this point, even compared to some of the peers in Nigeria. If you look at Ghana, Kenya, well, relative to South Africa, are still trading at a discount. So compared to other peers in Africa, really, I won't say the market is exactly cheap at this point.
Okay. What Abdullateef meant when he said PE is price to earnings ratio. So I just wanted to put that down for our viewers to understand some of the terms that we use. Okay, if we take a look at the naira, Abdullateef, at least in the last 2 weeks, we've seen it a bit mixed, but a bit tilted to the positive side in terms of appreciation. The naira at the I&E window at around 416 naira 33 kobo, it closed last Friday. What's the outlook for the naira this week, really, and perhaps for other markets, especially as Nigeria's debt profile hits close to 40 trillion naira, excluding the ways and means by the Central Bank of Nigeria?
So really, you know that when we are speaking about the exchange rates, a lot of what happens in that space depends on also the demand and supply for the FX at each point in time. So I feel like the appreciation we have seen in the naira, like you mentioned, on the I&E exchange rate window, even though there's not a lot, have been quite stable, but a bit secure. But it might be due to the fact that there have not been a lot of pressures on the exchange rates recently. I also don't think that there was a recently issued euro bond. I don't think, looking at where our foreign exchange closed at last week, I also don't think that should be reflected in the foreign in the in the foreign reserve, in the foreign reserve, yes, now. So when that also comes up board, there's the possibility of further improvement in that space.
Thank you, Abdullateef, for your thoughts this morning, and I wish you a lovely week.
Thank you very much for having me, Nancy.
I'll be speaking with Abdullateef Grillo, a senior research analyst at Meristem Securities. Let's quickly